the string of deals we've seen either in the energy or the pharma space lately.
Yeah, and all cash, by the way, which is pretty remarkable given, what we were talking about earlier with regard to the financing dynamic. I mean, this is basically a bet by Bristol on getting into these psychiatric and neurological drugs, which they see as a growing market, and one where the TAM appears to be kind of even bigger given this kind of crown jewel that Karuna has, this CAR XT, which is currently being reviewed for the treatment of schizophrenia, but also in development and could possibly be a treatment for use cases such as Alzheimer's and bipolar disorder. So very large TAM if you look at kind of strategically what they're looking at doing here. You see Karuna Therapeutics up 45%, of course, on this deal news, very close to the price by which they are looking to pay. $3.30 a share, currently trading around $3.17.
It'll be an interesting space to watch in the new year because it's a disappointing space this year. Healthcare, biotech, this stock hasn't done anything. It's down, I have 30% over a year. I know there was a call on Amgen this morning. Jefferies called it their top large biotech pick. On obesity's kind of stolen the thunder of the whole space. If you're not in that particular space, it's kind of like, okay, well, who wants to buy your stock? But maybe there's going to be more deals to be had in this space as well.
Yeah, Amgen's interesting. Yeah, Scott mentions today's call, upgraded by Daiwa yesterday and BMO the day before that. Three positive calls on Amgen just this week. But it's definitely about the companies that have stuck to their knitting, in diabetes especially, and Lilly's the prime example there. Let's get the opening bell and the CNBC Real-Time Exchange. And the big board, it's SP Funds, celebrating its S&P Global Technology ETF. And at the NASDAQ, it's Inno Holdings, a building technology company celebrating its recent IPO. As we try to get back to 4760, Dow getting dinged, of course, by Nike. Scott, I'm wondering how you're viewing the commentary you're getting on the half, just in terms of sentiment, whether we do feel like this is over our skis, given the backdrop of earnings, at least.
I feel like people are still bullish and maybe even getting more so and looking to areas other than mega cap to do so, suggesting that if you look away from that the market isn't as expensive as it otherwise might appear to be.
This is like the Tom Lee X-Fang 15 multiple that we hear about.
Yeah, of course, because the knock on the market is, if you look at the total multiple, it's 20 times. It's historically expensive. We've never been able to maintain that over a long period of time. Then if you take the hood off, and the hood has the 7 stocks on it, and you look under into the engine of the market, it sputtered for most of the year. Well, now it seems to be running on all cylinders. Whether it's able to maintain that or not is going to be the real question, but I feel like that's where people are trying to place their bets. Looking for, underloved areas of the market to buy into, even though so many of those are up a lot. Look, Russell's up 12.3% in the last month alone. So where are the bargains now? That's an interesting question.
That's a really interesting question. And of course, this week, the key narrative of the whole week was, are we overbought or not? And, we saw some technical shifts earlier in the week related to kind of hitting that key indicator
Probably
there.
Probably are, but you can remain overbought for an awfully long period of time. It doesn't mean overbought goes into sell-off mode, simultaneously.
Exactly. And, we're in the Santa Claus rally phase where we've got, starting today, it's the last 5 trading days of the year, the first 2 of next year, and 80% of cases, it has been a positive period for the markets. So, there's no real catalyst, of course, this week. And, early next week, we're looking ahead to the Q4 earnings, which are 3 weeks actually from today. They kick off with the banks. So we'll get arrested now before then. But, light liquidity, how much that narrative involving the Fed pivot is likely to carry us through this kind of Santa Claus rally period. It seems like a lot of people who come on our air believe it can.
Well, your space, the banks, they've done really well over the last month. I mean, it's like what Waller started, Powell piled on, and then, today Oppenheimer says Bank of America, Citi, Goldman, Morgan Stanley, their top 2024 picks. They like Jefferies and U.S. Bancorp, but there seems to be this renewed optimism around the financials.
Oh, absolutely. And there were some headlines that crossed last night. This is the weekly Fed data that comes out. If you recall that bank term funding program that went into effect in March, which basically allowed banks to tap into this borrowing facility using their own treasuries and other types of securities at par. So it was seen as kind of a cheaper borrowing mechanism. That hit $131 billion in the week through Wednesday, which was the largest ever. So a lot of people looked at that headline and they said, oh no, this means there's more stress in the regional banking system. Here we go again. Actually, that's not it at all. There's a really interesting arbitrage trade that banks are seeing kind of with this lightening up of rates, as you will. So basically, you've got the overnight index swap that's fallen, the market pricing and rate cuts. So that's 4.88%. So what banks are doing is they're taking that and then they're plowing that capital back into the Fed, which is paying a 5.4% interest rate, capturing the spread and doing so to the tune of $131 billion. And so not necessarily a sign of any stress. So you've seen this huge runoff in regionals lately because people see the lower interest rate as being
it almost
beneficial
rhymes with the sweet spot of the consumer story where you got prices falling faster than wages, and they're catching that spread at the household level, at least for now.
Yeah, and you don't know how long this program's going to last. It was initially set to kind of be a one-year deal, so that would be March of 2024. So you got kind of 3 months to capitalize on this, but it is kind of an interesting use case for these banks that, of course, have been so beaten down in the first, say, 9 months of the year since November. Just a totally different story.
You know what call is looking like one of the best calls we've seen? You jarred my memory on that, is Bill Gross calling the bottom in the regional banks in early November.
But tied with Ackman long bond.
Yes. But I mean, Gross calls the bottom, right? He says, I'm the KRE, he names a few names.
Like the 49ers beating the Eagles.
There are a lot of regional, well, the small caps are dominated by regional banks, right? It's the biggest part of the small caps. So that's just an amazing call because those stocks are up so much. I mentioned what Schwab's done since November 1st, but I don't know, those stocks have just absolutely surged.
Not to say, though, that there aren't still unrealized losses, right?
Absolutely, there are unrealized losses. And as we were talking about earlier, just because rates go down, say 50 basis points, that it relieves pressure, absolutely, but they still exist. As long as you can keep your depositors, and another key dynamic here is when rates decline, depositors have fewer places to take their money and seek it elsewhere. Obviously, the cash flows of this year to date, Bank of America had new numbers on that showing obviously a tremendous record. I believe it was 1.34 trillion going into cash year to date, obviously because cash is finally worth something these days. But that whole kind of cash shifting trend has impacted the State Streets of the world. It's impacted a lot of the wealth managers of the world. So the notes you were referring to this morning, a lot of the analysts out there, they really like big banks that have sizable wealth management divisions because of this trend. As rates go lower, people, they don't go seeking higher yields outside of their deposits.
I'm sure James Gorman's sitting in his office, saying, agree, wealth management, it's been good. It's been really good for us. I agree with Leslie Picker.
His last 5 days in the job, by the way.
Right.
After a wonderful interview with David
on
yesterday. Absolutely.
If there is a threat to sort of the soft landing story, it might be energy related. WTI crawling back to 75 today, aiming for a 5% up a week, both on Brent and West Texas. You have the Angola OPEC news this week, but also the Red Sea issue, obviously. Container prices back to $10,000, affecting the East Coast more than the West Coast. And then Maersk implementing some surcharges on these diversions. We had the CEO on Money Movers earlier in the week. He said it might be adding 2 to 4 weeks delay. IKEA is a good example. They mentioned it this week as well. But that's at this moment. We'll see whether or not that 2 to 4 weeks delay timeline gets expanded if this gets worse.
Yeah, there doesn't seem to be much on insight here, although energy is the strongest performing sector today, at 0.7% right now. Consumer discretionary is the laggard there.
And then you have Buffett. How much Oxy can one person or
much
one
as he wants, obviously.
Another 310 million, now 28% ownership of Oxy.
Yeah.
He loves this story.
He has been just, over the last 2 years, has been just really acquiring, and obviously buying, on the dips in order to kind of capitalize and grow his stake. But yeah, 28%. I remember when he went over that 10% threshold, that was a big deal. And now we're almost triple those levels. It's pretty remarkable. You can see there are 2 years of more than doubling for Occidental there.
Yeah, and I mean, the stock has done next to nothing this year, as energy's been by far the worst performing sector. Is that going to change in the year ahead? There were so many counterintuitive things that happen this year in the market. You know, energy has